All right, right here we're going to go over my trade on SIRC. This was a stock that was breaking out over 52-week highs, multi-week highs, multi-month highs, everything, because of some good news. Let's see here. It was, charging installer acquisition for opening of dedicated EV charging station division. So that was on the 3rd. So when I got in on this, I got in on the 4th, and it was a second green day right here. Let me get one more day. We'll get 10 day so we can see. We can see the run up. So this was the day that they kind of like announced that they had the acquisition. It spiked. It liked it. I didn't find the stock till the 4th. Me and Xander were watching it just for some OT swizzles, looking for consolidations. So I like the news. I wasn't planning on holding this. This was my first trade, so I had never held it before. But take a drink. But everything was lining up. The chart was beautiful. We got good volume. The day of, I can't remember what the volume was on it. I think it was even higher than this, but it had really good volume. Really good price action, really good movement. So when we started watching it, it was on the 4th here. We were watching it for its good news. We were just checking some of the consolidations here. I think we started watching it around noon. So just kind of checking for these consolidations. So I got serious about getting in on it after this panic dip buy right here. And we were watching this consolidation here, and then I realized if it can break out through, I think the VWAP was around here. It was breaking through VWAP as well. So I was watching its support and resistance levels right here. I was waiting for it to break through right here, but I didn't want it to break its resistance levels coming across right here at 248, because I wanted to give it like some room if it gapped up, which I was very sure that it was. If it gapped up above that, then I felt like it could spike even higher. So I was kind of hoping that it was really going to sit inside of, these lines right here. So I was making this plan like around 2:30, 2 o'clock, and kind of this sideways price action right here. So as the day closed, it was setting up really beautiful. And so I decided to go in because I felt like it had a really good chance of gapping up. I was playing a 3-to-1 risk and reward. So I was risking 4%, which was I'm very comfortable with. It was only 1% of my account. So I was risking 4% on my investment, which was $1,100. For all transparency, I tried to only get in for 250 shares for like $500 investment, but I had a problem with E-Trade, and I accidentally double ordered. So I got in risking 4%. So I was hoping for about a 12%, reward level. I was basing that off of its previous day's gap. Let's see what its previous day. I think it was like around 10. So what was really important to realize with this is it had a history of when it would gap up. You can see here it gapped up, gapped up, gapped up. So it had a history of gapping up. But I also noticed that, let me pull it up closer too. Once it gapped up, right here, it would gap up, and then it would run, and then it would go down, right? And then it would gap up, it would run, and then it would go down. So I had a feeling that it was gonna gap up because the history was gapping up, good news, and it was also gonna run a little bit. So I think the gap ups were, let's see if I can do this correctly. Let's pull this across. So this is like a 10% gap up. This one is going to be 13%. Yeah, so I was like, okay, so it's got like a 10 to 12% gap up percentage, and it's known to run in the morning and then it goes down a little bit. So I set my kind of average that out at about 12% reward. So I risked 4%. That I was happy with. So as it formed up between my support and resistance lines, very happy with it, and I decided to go in. So I had a little bit of a hard time getting executed, but that was just my fault. I was like accidentally did a market order and then all that crap. So I got executed averaging at 233, which was so perfect right here. I think I got executed 30 seconds before the market closed. Me and Xander were just so hyped. So I got executed at 233 average, 500 shares. I just liked how it was building up. It had good consolidation through the days, the sideways price action, and it was holding its highs on a second green day spike. So I was very happy with it. And on good news, it was a good catalyst. So everything was kind of going for me, the history of gapping up. So I held it, and another beautiful thing is after, let's see here, in the morning, this was at 5 a.m., a news article came out saying that this news on Money TV, or this week on Money TV. So it got some good publicity before market, which was absolutely amazing. Me and Xander continued to research it. It was positive, so we were even more hyped. So that was just kind of confirmation that we were sitting for it really well. So held it. My plan was to sell as soon as market opened. I knew that it had a little bit of a history of running, but because it was my first trade, I wasn't going to risk big. I just wanted to, sell out at market open and collect whatever the gap up was. So I was very confident with that. And then I was going to use that run that it usually does in the morning to give me some safety to make sure that my order was filled. So as you can see here, everything went absolutely beautiful. So it gapped up. I think it opened at 260 right here. Boom. So it did an 11.56, 11.5% gap up, which was almost exactly as predicted. I predicted 12%. That is exactly what I wanted. So it gapped up to what my reward level was. So I was more than hyped. I was ready to get in and just like take my 12%, have my first victory. Boom. It spiked way higher than I thought it was going to. So it gapped up by 12% and then it spiked by another 15%. So essentially I could have gotten a 25% profit on this. I, in hindsight, should have held, but because it was my first trade, I wasn't going to get greedy. I was sticking to my plan, so I think I did do the trade correctly, even if I could have got more, but that's not the goal. So so essentially it did a perfect gap up, and it ended spiking at $3, but I stuck to my plan. I got out at 261. I was having a hard time getting executed because it was moving so fast, which is beautiful, but it was moving up so fast. So it was a little confusion with my execution, I guess at the entry and the exit, but it was my first one. I'm getting used to it. So I got executed at 261 for an exact 12% profit on this. Then a follow up on it. It crashed back down to 250. Had some pretty much just sideways action going through. Let's see what it did the next day. So the next day, I guess it did, let's see here. I guess we did get a little bit. I think it opened right here. So we did get a 4 or 5% gap up, but as soon as that happened, it came down. So let's pull up the one day. So yeah, the next day, so I got in on this. The day ended green, but not as bold, and then the next day was a red day. So I really got this perfectly. Something I'm noticing with gap ups is second day gap ups are working right now. I know Tim likes first green days. First green days, second green days, I think are solid plays. You're not risking much. Sometimes even third green days, but as you can see here, fourth day, came up red. So I think I predicted this really beautifully with the help of Xander. We ran our sliding scale on it, and I think it got an 83. So everything was going for it. I felt confident. Took the steps, took a deep breath, got in, and as you can see, it just it's steadily gone down ever since. So predicted the highs, the news, buy the rumor, sell the news, I think is kind of what we got going on here. So yeah, it has just kind of stair-stepped all the way down, hitting lows, and we'll see what it does. But yeah, that's my first trade, and here's my audio journal of it, and it's pretty beautiful.